Today's video is all about ARTRADE, the art of collecting value. Guys, today we're going to be doing a deep dive into this project, looking into some of the fundamentals such as the team, the tokenomics, the utility, and the overall value proposition, trying to figure out whether this project has what it takes to make it to our portfolio. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome on the channel. We talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunity, and the question is ARTRADE an opportunity? Guys, we're doing a deep dive today into this project. You know, it's definitely a unique one. It's one of which, you know, I very rarely and most often do not cover here on the channel, because it's not a very common thing. It's not a very hot idea at the current moment. Like, it's not trending at the current moment. But again, you know, we're looking for first mover advantage, right? We're looking for projects that think outside the box and that are doing their best, you know, to bring some value to the space that others are not thinking about. And that's where we speculate, right? That's where we start looking for these opportunities. And that's what we're going to be looking at, you know, ARTRADE as an opportunity, and trying to figure out whether it has what it takes to make it to our portfolio. Guys, just keep in mind, I'm going to have this all timestamped below, and the most important part of all of that is looking for the summary towards the end, right? Towards the end, they're going to have that summary where you can get that infographic, and you can get all the details of what we're going to be going through this entire deep dive. It's going to be a full-on lecture regarding the project, guys, so be prepared for that one. I'll have the infographic all over the socials and the full-length deep dive all over the socials as well, so you can go check them out. All right, guys, so let's begin. Let's see what ARTRADE is all about. Just note that this deep dive was voted upon with the community on the Discord. You guys voted for it, and here we are. Some, you know, I'm sure there's some ARTRADE fans and enthusiasts that went in there and had their way with the voting process, but it is what it is. As you can see, we have a beautiful Rolex right here, right on the screen, and it's definitely enticing. It's inducing, right? It's something that it makes it very engaging. And what does it really mean here? Okay, so we can get a few ideas. You can see that there's an ATR, which is the ticker, staking available, secondary market, and drops. So that's what we're looking at right now, just to get an idea. We'll navigate some of this in a bit. The art of collecting value. Okay, so that's their slogan. I'm assuming. Welcome to the Crypto Private Sales Club for art and luxury goods. Get up to 40% off Rolex watches, gold, and art when you stake ATR, based in Paris since 2021. Buy ATR, and here's the white paper. And of course, we're going to go through a little bit of that today, and I'm not going to get into too much detail, but the good news is that this project is very simple, right? We cover so many complex projects, and this project is super simple, so it's going to be quite easy to just understand. And you can see these are the latest picks on things, on items, on luxury goods that you will be basically participating for in a raffle. So you can qualify for raffles by being a holder, and all of this, all of these benefits. It's basically receiving benefits for commercial goods if you're a holder. Okay, so you got a bit of wine here, or champagne. I think that's wine. But we got something else here, some sort of chateau for travels, AirPods, if you're into that type of things. You got all kinds of different goodies. Okay, again, like if this is what you're interested in, right? If these are, I don't see any Rolexes so far. Here we have, what is this? Gold. Everything runs on ATR. Our unique token powers every purchase, rewards staking, staked on ARTRADE. ARTRADE. I'm hoping I'm pronouncing that correctly. It's just a little bit awkward. ARTRADE. Okay. Let's see what else we have here. We have the market cap. We have the price. We'll talk about the tokenomics, of course. And they did burn quite a bit. And this is something that can be confusing for some people, given the fact that both CoinGecko and CoinMarketCap have two different values for their tokenomics, right? So we'll kind of iron this out. This is the one that is given by the team, and this is the one that is supposed to be giving us the most value here, or the most of what is the truth, right? So, and it is valid. Okay, this is the most valid current tokenomic metrics that you should be looking at. Transparent economy owned by its community. Every ATR stake strengthens the DAO treasury on Solana, funding new drops and real world assets with full on chain visibility. Okay, so this is something that we can kind of like, dig in here. It is a Solana-based project. It is the DAO. Why is it a DAO? Because they have some sort of governance where the holders can participate in voting on different decisions, on different aspects of the project. Again, I'll show you the platform in a second. And the world assets with basically full on-chain visibility just means that, again, when you're looking at an open blockchain like Solana, you can take a look at all the transactions that are happening on-chain. Okay, so that's what it's. So it's a token on top of Solana. A member buys ATR. The community wallet grows, and new items can be offered. So basically, as the ATR holders hold, the wallets grow, right? Ultimately, and that means as the wallet grows, they have more funding to offer new items, and then there's that flywheel effect. The more items, the more people want to stake and buy and hold ATR, and then the wallet keeps on growing and back and forth, round and round. Now, some of us, will clearly start thinking about this as a very pyramid-like schematic, right? But there's because there's a DAO, and because ultimately. Yeah, bringing in new members and requiring them to stake and bringing in new fresh capital, and then the people that are, it does seem that way, guys. You're gonna have to do your due diligence. You're gonna have to think about it on your own. I know the team does provide some documentation trying to rebuttal that, but it is what it is. Okay, you gotta really get to that. I'm not here to, put anything out there regarding that. It's just, everything to a degree is a pyramid, to be honest. So it is what it is. Stake, earn, collect, lock your ATR on Solana for 90 days to unlock exclusive discounts, earn rewards, and help fund new drops for the community. So this is how it goes, right? So supporter, 20% off on drops, ATR redistribution, and 10% APY. So redistributions, any revenue that's coming in, they get a bit of distribution, and 10% APY is just the reward for staking. And you're off on basic 20% off on drops. If anything, comes to the marketplace, you get 20% off. And the minimum is 25,000 ATR and a 90-day lock. So you have to lock up your tokens for 90 days. And given the price of ATRs, you got to do your math to see how much that converts into your currency, right? Now, if you go up a little bit higher, obviously, you can go to the max, which you get 40% off, right? And you get ATR redistribution, and there's no change in that. I don't see anything, difference in the ATR distribution based on how much you lock, but you do get a better APY, which is 20%. So you can see this is a very, staking scenario, and it's incentivizing people to stake in a very creative way, which is of course the 20% the drops, the 20% off on drops. So the more you stake, the more you qualify. And obviously this is very typical. The APY is very typical across the space to earn passively for staking, but that's not the complete overall value proposition, or the proposition that makes it a point of differentiation. It is actually what makes this project different is the fact is that you can participate in these drops, right? In these discounts on collectibles, artwork, and luxury goods, right? So that's what kind of makes it different. You can join their community right here. Join 700 plus members, shaping the future of luxury goods on Solana. Become a member. Okay, feel free to go do that. Go check them out on the socials, guys. Discover new drops. Discover secondary markets, so a used market and a marketplace for that. Redefining how the world of luxury and art. Okay, so guys, again, more repetition, and then they have their roadmap. Okay, so the roadmap is interesting because they are still in progress right here, which means that did not meet milestones that were meant for 2025. We're already, in 2026, to almost 2 months in. Okay, so it is what it is, and they're coming soon with some of this. At least they do have a roadmap, and at least they have it, defined by quarterly. And it's not good that they are not meeting their milestone, but it's okay. It's okay because again, they're not that far off. But I'm going to tell you, like, the reality is that the roadmap going forward is not that progressive in the sense. There's nothing really major to look forward to, right? So we got luxury brand partnerships. Okay, sure. Luxury store partnerships. Fine. Yeah. That would be an assumption given that this system works properly. I'm assuming that luxury good products might want that, or maybe not. Because to tell you the honest truth, luxury goods don't want anything to do with raffles and things like that. It's bad for image, right? You don't see raffles for Rolexes. They're acquiring the Rolexes and then doing it third party. Getting partnerships for this type of distribution of product means that the product itself, the product image and the product placement of the product itself needs to be in line with raffles and giveaways and things like that, which luxury goods don't really do that. You don't really see a Rolex on sale, right? That's how we had to look at it just a little bit. So MBE professional delivery partner API integration near automated shipping. Okay, performance that's pretty good. Raffle engine, okay, improving that, and booster pack scaling. Okay. And then their burn mechanism getting a bit of an upgrade prototype for it. Okay, more burning. I don't know if they need this much burning because they've been burning already, right? You don't want to have too much burning. You want to have a healthy ecosystem that because they don't have a way of introducing new tokens. Their tokens are capped, right? We're going to talk about that again. You don't want to keep on burning to the point that you have so little tokens. You want to have a healthy balance of tokens being burned, but tokens being issued as well, or not have an aggressive burn, right? So having tokens available, as long as it's not inflationary, there's nothing wrong with having tokens. Most people like the buzzwords of deflationary, but it's not a necessity all the time. In fact, it could be a poor choice for tokenomic purposes. Global statistics on Dune.com. Okay, fine. Daily quests to earn ATR. Creative. Chainlink patter ship. I'm not sure what that is. Patter ship. I mean, maybe it's a type of pattern ship. Build on Solana program. Chainlink. That's not really okay. That's an Oracle. Sure. Product buyback. Instant cash offer. Okay, that's interesting, I guess. But again, there's not anything major that is going to be changing with regards to their value proposition. What they are doing is still very clear. It seems very mature that their idea is in a state of maturity, but it's just because it's very simple, the idea, that makes it not easy to, or not necessarily easy, but it's not doesn't have any more facets to expand, which is cool, right? You can have a simple idea with a simple value proposition, easy for retail to digest and understand and move on, right? You don't have to have all these complexities. You guys know that I do a lot of deep dives, over 140 deep dives that I've done in the last little while. And I've seen my fair share of complex projects where you have no idea what's going on, but their communication is poor, their ideas are over the top, and they're promising you the world, right? So at least this is not the case. It's easy to understand and, type of thing. Let's see. Our Solana programs were audited by Fuzzland. Okay, so they're audited and all that, and they have some of this going on. Cointelegraph. I don't really appreciate these very much, okay, because these don't really add any value. If you know, you know, right? Go check in some of these blogs and some of these distributions of communication. They're either you can pay for all of this. It's not very how can I say genuine in that case, right? So find all the answers to your questions here. Who pays for discounted items? Let's see. The items are purchased using a portion of the ATR token supply, specifically allocation on this purpose. 30% of the total supply with this wallet, the DAO wallet, is public on the blockchain. So I'll definitely talk to you guys about this. And they are very transparent about their tokenomics, except to one point. There's one thing that would make them perfect. And for some reason, they didn't do it. Maybe they assume that people are going to assume, but you shouldn't assume because there's a lot of retailers out here that don't know much about what's going on, and it would be nice to connect all the dots for them to make it frictionless, right? So how is ARTRADE financially sustainable? So the DAO wallet is profitable in dollars as long as the number of participants buying ATR exceed the item's prices. So you see what I mean? So it's like a raffle system. It's a raffle system of where as long as they can, have more ATR in there that are participating in these raffles that exceed the item's prices, you want to make sure that you have enough people buying tickets for these raffles, essentially, so that there's residual income, there's residual money that can be used to become profitable and essentially buy more items, and the team can earn revenue through these fees, index trading volumes, and so on and so forth. So again, it's a very typical on-chain system, but very traditional raffle system as well. Can our trade offer 40% on luxury goods, right? So the items are sold with a model of no loss, refusing using our crypto token ATR. Okay. Selling pressure. Can we offer model work of losses? Okay. How do I verify if our trade is legitimate? Okay, this is going to be interesting. Check ATR on CoinMarketCap. Review, guys, this has nothing to do with anything on Trustpilot. Okay, fine. You can't trust anything out here. Okay, guys, this is the wild, wild west of crypto land. Okay, I'm just going to throw that out to you. Please, please pay attention. This is not me fudding the project whatsoever. Okay, this is me being real with what crypto's all about. Okay, this is very speculative. This is very new. This is very small micro cap, market cap project that has very little roots. And not only that, even if it did have a lot of roots, big projects do come down. Okay, so we just got to understand that there's no way to verify legitimacy of any Web3 project at this current moment, because we don't now have any clarity regarding, you know, anything. So just be very clear about that. How do I know items are authentic? Again, there's a trust-based system sourced from dealers like Watchfinder and all this. If you trust this and you trust all of that's great, because there's no other way other than putting a bit of faith in Web 2 ideas. Okay, can I lose money by participating in a raffle? So you can't lose money, lose any assets. You either get an item or get ATR back. The only risk you take is basically not being able to get anything out of the raffle. Okay, so yeah, that's about it. Subscribe to our newsletter. Go check that out. And that's about it, guys. They have a few little links below. To be honest, the website's a little bit rough because the sizing and all of that is not typical. And then you run the risk of not having typical sizing. You have to run the risk of browser skewing and all of that. So I'm going to do my best here to get this all visual. As you can see, they do have a few links here at the bottom if you want. So they have their definitions, raffle, auctions, booster packs, and direct sales, and account, ATR, messages, sign in. This is your account. And the community, guys, they're on Discord, X, Telegram, and so on. I went to check them out, so I'll give you my opinion on what's going on there in a second. And a blog as well. Go check that one out. It's very not kept. It's outdated, severely outdated, unfortunately, but it is what it is. Okay, so at least we got an idea of what's going on here. Okay, very clean, very clear. Let me just reposition this just again. Once again, I apologize for this, guys. Again, this is the reason why I suggest that, websites, when they're designed, they understand that the average view of a PC, of what all the other general 99% of the websites, how they're designed, to keep it in line with that, because you don't want them not to fit properly on different monitor sizes and all that kind of stuff. So it is what it is. That's about it. Okay, so now let's get into some of these details here. Let me just quickly, let's take a look at what we got. We got their so-called white paper. So again, I'm gonna have to reposition just a little bit here. Okay, maybe that's good enough. Right, that should be good. What is ARTRADE, the light paper? Okay, so a light paper is just a briefer version, right, of a white paper, and I'll tell you that ultimately this is what they got. Okay, there's nothing more. There's a few, Q&A sections here and there. We'll look at some of this stuff, but this is what they got. What is ARTRADE? Now, I just want to just throw that out there, that it's a very small project, okay, and very speculative. There's no real competition in this space. There's no projects really doing what that has received the first mover advantage. So ARTRADE is a marketplace on Solana blockchain offering authentic art and luxury, real world assets. As again, we're tying in with the RWAs, such as watches, gold, collectibles at significant discounts, right? So the discounts are rewards. Just keep that in mind. This is made possible by our native utility token ATR. By staking ATR, you gain these rewards. Our community members unlock access to exclusive no-loss raffles and other game modes, allowing them to acquire premium items for 20 to 40% off below market. Again, the more you stake, the more you qualify for bigger rewards. This is how it works, guys. So again, this is a structure of which we've seen traditionally, from the beginning of time, before the internet. And then all of a sudden, we start to see this become a governed idea on the blockchain. So we're going to see a lot of this going forward. Okay, so it's a real world economy around tokens, the design, the sustainable, transparent, rewarding the community. Okay, good stuff. Go watch this. It's a good propaganda or a good a commercial to kind of get you an understanding of what it is, the vision. They want to be the Tristies, this the of Web3. Uh, Look, it is what it is. not saying that there's no room for that. I'm just saying that if there's gonna be anybody that's gonna do it, it's gonna be Tristies themselves, right? They already have the brand image and the trust factor, especially in luxury goods. And this is what it is. So they're starting off very small, and they're gonna have to really, really understand. Now, what I don't really get here is why are their logos mismatched? Like, is this the logo of ARTRADE, or is the other one the I don't know what kind of animal this is right now, but their animal that they got up here, is that their logo? At this point, I don't know. Like, I feel like I'm almost speaking about two different projects. So they got to get their marketing, aligned, because I'm feeling a little bit uncomfortable with the fact that I'm speaking about two different projects and I don't know if I actually am. Okay, so this is important stuff. The user journey, how to participate. So we talked about a lot of this already. I don't want to get into too much detail. There's the different tiers, the 3 tiers. Again, the more you stake, the more you qualify. And these are the different items, again, engine and the tokenomics model. So this is how they're introduced to tokenomics. There is a section about tokenomics, but they also introduce it here as well. So the sole currency for purchasing items, that's what ATR is used for. The key to staking for user benefits, again, we talked about that, and the tool for DAO governments. Those are the three major utility points for the actual token. Why do you need ATRs? These are the three main reasons, plain and simple. Now we can see a couple of categories of distribution. We have the DAO that holds a decent amount, approximately 27.3%, which is nice. And then you have the reserves, which is about 13.6. Again, these reserves are basically held by the team, which again is very centralized, right? And then we have staking rewards. Again, those are rewards for stakers. And again, they're hoping to keep this afloat as the revenue comes in. They're going to redistribute into these categories to keep them afloat. And the burning, the staking burn, this is what they're burning and so on. So they have been burning. And then the DAO long-term reserves, again, behind the governance, then, they are going to be able to vote how these tokens are being distributed. And then the holders. So the holders right now, the actual community, right? This is what's in distribution. This is what is in circulation. 39%, which is fairly healthy. Now, I'm glad to say from a tokenomics perspective, there is no real vesting schedule here. There's just rewards based on, again, staking and other factors here, but that is dependent on the revenue as well. So these pools of liquidity need to be replenished as the project becomes profitable. And there's no more issuing of tokens. There's a cap, and we'll talk about that in a second when we get into the tokenomics section that they do have here, as you can see. So it's a little bit everywhere, scattered everywhere, a bit of this. I would suggest removing this from here because it just makes people feel like that's all they get for tokenomics, which is not true. How items and staking rewards are funded, again, sourcing, drop, and results. So based on the results, they get a little bit of residual income or revenue, and then they source again using that revenue. They keep this pool going with money and so on, and people staking and more pooling and more money and recycling money and pooling and items and purchasing of items and so on. And so it's just a little bit of a cyclical event, like I showed you on the main website. They did a good job explaining that, but it does bring in that unfortunate feel of a pyramid. And again, they do cover this idea here, a pyramid concept, somewhere in this white paper, and I highly suggest you read it in full detail, okay, guys? But it does give it that feel. Okay, so their vision, thesis, and so on: two powerful worlds, tangible legacy and digital innovation. I can see that. And their model, right? A tangible value, token with purpose, and community-driven economy. I can see all of that. I'm just not crazy about the reality. Do we need this? And the actual value proposition of distributing luxury goods in the way there, and that type of feel, because it's a bit of a gamble as well. So you're getting that pyramid concept and that gambling feeling, because you're basically buying entries to a raffle. in one way or another, whether you like it or not. It's literally buying entries to allow, but you have to qualify for that entry for these raffles. As you can see, this is how it is. And again, I'm not getting into more detail because this is it. You got what you got, the two outcomes, based on you being able to participate in the raffles and so on and so forth. The system is built for holders and ATR redistribution. So you get qualified for redistribution. Key principles of ARTRADE is that you never leave a raffle empty-handed while only one person wins the item. The value generated by the sale of is shared across the entire ecosystem. So it's very redistribution. It's very trickle effect from top to bottom, and that's that feel. Secondary market. So the ARTRADE experience doesn't end with the initial sale. To provide liquidity and continuous opportunities for our community, we have built an integrated secondary market. This is more interesting, in my opinion, than the raffle. It is designed to be simple, safe, and efficient environment for peer-to-peer trading of the asset one on the platform. I don't even agree that it should be one on the platform. Who cares about that? In my opinion, the most interesting part of all of this is being able to just focus on a secondary market. Guys, if you speak to the luxury goods industry involved in that industry, a lot of them, they want the way they make their money is not buying luxury goods from the source brand new. They make their money by buying luxury goods off the secondary market and reselling them, polishing them up, refurbishing them, giving them a few little tweaks, and putting them on the market again for a bit of a premium. That's the way they are able to get stock and sell stock more efficiently than actually getting them from the source. Guys, that is, in my opinion, that's where they should be looking at. So there's a bit of a focus that might be a little bit off, but if it works, it works, guys. Secondary market's the hottest for luxury goods. The items, there's different items, different categories. Again, fine jewelry, art, collectibles, high-end technology, and tech items, and so on. Okay, so I'm not getting into all of that. You can look at it that more. Now, this is where things from a tokenomics or a Web3 or a crypto project perspective, this is what matters. Okay, the ATR tokenomics are engineered to create a sustainable and deflationary. Well, guys, they definitely make it deflationary and transparent financial ecosystem. So I'm not going to read more, guys. You can read that. But core token details. Okay, so ATR is the ticker, Solana. This is the address, and this is the initial supply. Okay, this is important because once we start looking at what I want to look at here, let me just quickly show you here on CoinMarketCap. You can see that CoinMarketCap shows the max supply as 1.26 billion. The total supply is 1.26 billion. So that means they're fully diluted already. Now, if you go on CoinGecko, you can see that they have it at 1.8 billion and the total supply being 1.26 billion, which there is a correlation here. And then if you go back to the tokenomics perspective, you can see that their initial total supply with that keyword initial is the 1.8. Now, the difference is what they've burnt. Okay, I want to make that very clear. They burnt quite a bit of tokens. So we'll talk about that right here. Deflation mechanism, the burn. The key feature of the ATR is its deflationary design, which increases scarcity over time. Yes, they do have 1.8 billion, so they do have some availability to scale it down a little bit. A portion of the supply is permanently removed from circulation through two primary methods: raffle revenue, burning, so 10% of the ATR from every winning, so 10% gets burned, and the DAO voting burn, so the DAO can actually vote on what, when, and how to burn, right? So, and this is great. So as of October 2nd, 2025, the total burn was 539.6 million ATR. So that's why we have that discrepancy between the 1.8 billion and the 1.2 and change billion. Okay, so this is where we're at, looking at these two different metrics. So the current supply of since October 2025 is 1.26 billion ATR distributed like so. Now the distribution, again, different categories. We talked about the 39% decentralized community. We'll talk about that decentralization in a second. The DAO, supply revenue sharing initiatives, but it is voted by the DAO, so that's good. It's decentralized. So there's many ways to decentralize. Obviously, the tech, the stack itself, the token distribution, of course, and then the governance, right? The DAO. So how the organization is decentralized, and the power behind is usually the capital. So that's good to see. I appreciate that. And then the reserve tokens owned by ARTRADE company. So the company owns this. Okay, it's for strategic purposes. So we have to assume that 13.6% of the tokens have to be on a trust-based system. Do you trust the team? That's it, plain and simple. 13.6 is governed by the team, and the team is very small, and they are going to be using these tokens to do whatever they need to do to make, in a strategic way, to make ATR successful. It's a trust-based system, not trustless completely. So this is a level of centralization right here. Staking rewards, 6.5. Reserved for staking API offered to the DAO members. Okay, so that's rewards. Staking burning. This is what this is like a pool of burning that is happening. And DAO long-term reserve, other community reserve for allocating by the DAO in the future. So the DAO can vote on what happens to these tokens. So the only thing that you should be doing here is reflecting on the centralization and the decentralization based on this token distribution. Right? There's some categories that are centralized, some of that are decentralized. We want to make sure that the centralized portion doesn't represent too much because then it brings in a risk factor. Okay, let's keep on going down. This is where I wish they would have taken one step further, guys. I appreciate this, but we have to assume that the first wallet is a DAO wallet. Right? We got to assume. It's an assumption. There's no guarantees. There's none of that. We got to assume that this level right here, because you can see that the second wallet is MEXC, the third wallet or the fourth wallet is Gate. I'm assuming if you match up the numbers, 6.7, I'm sure this is the DAO, this is the 6.7, I'm assuming. And then this one, this DAO portion here is this one up here with the 24%. Assumption. Put the name, put a label here. Right? Give us where the account where it belongs to, just to make things clear. Very, very clear. Okay. The following table provides a snapshot of token distribution among the top 10 holders of October 2nd. Now, we're going to talk about the holders in a second, because this is very transparent, no doubt, and we're going to make those two assumptions for sure. But the listings and all of this is also very important, because we have to know where the liquidity is at. Is there liquidity? Now, DEXs are generally not the best places to find liquidity. Centralized exchanges provide a bit more security for that liquidity, and the biggest one that I can see right here based on this listing is MEXC, okay, which is, I would say, maybe a C tier going on to B tier exchange. Okay, so it is what it is. Let's take a look at this distribution. As you can see, these are the wallets, the top 10 wallets like were shared with us. We have some whale wallets, big wallets, and so on. The first one being that 24. Again, we're making assumptions. Let's take a look at the visual representation of these wallets. So you can see that there's some big wallets right here. This one is the 24, which is the first one in the category. So if I toggle it on and off, you can see that's the one. Okay. Then there's this MEXC wallet right here, which is the red one. You can see that they're moving some around here. I'm not sure why. Then you got this other big one, which we don't know what it is, right? Right in the smack in the center, which is about 6.75. I'm assuming that, again, it's the treasury, the DAO, the long-term DAO. Then you got the Radium pool right into here that is moving a bit of tokens around. Then you got Gate, another one right here, and then a few others like this one right here. We start to get, smaller and smaller significantly, down from approximately 2% all the way down to 1% and below. And we start to assume that now these little dots are just regular holders like you and I, and they're pretty big nonetheless, because again, this is a very small market cap. Now, just to go back to tokenomics for a second, market cap wise, we're talking about a $1.5 million market cap. That is a baby. It's a micro cap. It is the smallest, like smallest of small, pretty much. Okay, guys, we have to understand that. Like, the volatility will be crazy. The depth of liquidity is not there, right? So it's a very small speculative micro cap. Guys, please put it in its lane, in its category that it belongs. Do that, please. Because of your expectation, it could be 100x, gains, which is very possible with a micro cap like this, because at the end of the day, you can still reach, $300 million market cap and still be considered small. Very like 300 million is still small. So the truth is, it has a lot of room for growth, but because it's so close to the bottom, it takes anything for it to collapse, right? There's no depth of liquidity. There's nothing here. So just keep that all in mind. Now, from that perspective, tokenomics are okay. Whatever, the distribution is decent, and they have their DAO, right? They got their DAO, so this is where they host their DAO, and you can explore the DAOs. So let's search that. Let's see if we can find it. Sorry, guys. ARTRADE. Right. This is and again, their logos are a little bit everywhere, guys. So this is their logo, or is it the animal there, guys? This is again a little bit off. I feel like I'm doing two different projects at any given point. So here we are, ARTRADE DAO, and as we scroll down, you can see there's different proposals and such, and there's only 115 members, only 31 proposals, and assets in treasury, treasury assets. I'm not sure a dollar. I'm not sure what's going on there, and that's what I mean, guys. So this thing is, although they do have a DAO, it's not very active. 7 months ago, this is stale, stale. There's no activity. There's nothing happening. Even on what I see on their website, as far as products go, they're stale products, guys. I don't see anything, luxurious about wine or some random stays at a chateau. This is, for me, it seems very, very stale. Okay, and then you can go to their blog, guys. The last post is in April 16th, 2024. So we're stale. We're in a very stale state with regards to what this project is about. And now again, the logo is here. So I feel like I'm using a completely different logo, or am I doing a different project completely, that you can see on their main website. That is a problematic thing, very problematic. Okay, so right now ARTRADE has something to do here, some work to do from a communications perspective, and then from a Q&A perspective, we're back here. And again, we're seeing the little animal there. I don't know if it's a panther or whatever it is, but you can see a bit of miscommunication. Very, very confusing, for sure. And again, their auctions, their raffles. This is good learning material. So I'm appreciating this. Learning material can never, never be limited. You always have to have a lot of information for people to study, and I like this, nice and clean, nice and clear. We talked about all of this, guys. Please dig through. I'm just showing you that this is a resource for you guys. It's a little bit of a repertoire of different resources for you to learn. So I love it. It's good stuff. This is what I like to see. And then we have the section regarding the team. Okay, so the team aspect is interesting, because we do have a very, very small team. Okay, so they do have they're pretty much doxed, right? But privacy and security and their partners, guys. They have some partners here listed. Very, very. Their Solana's not a partner. Okay, guys, please be careful with projects that talk about things like this. Solana's not a partner. This is, crypto.com is not really a partner per se. These are platforms that take on other projects to work together. Yes, they're good relationships, but they're not partnerships. Okay, this is the reality. Now, Oracle partner. This could be a proper partnership with Oracle's from a tax perspective, and even more so, guys. These are absolutely not partners. Okay, so please be careful when you see logos like this. They might have some dealers that deal with these individuals, like third parties that have Rolexes and Cartiers and all this, but the actual Rolex brand themselves doesn't even know what ARTRADE is. Okay, they don't even know that they exist. Okay, so I'm telling you that this is where we're at here. Be careful with a lot of these bold statements. And I'm not saying that they even say that, but having their logos here in such a way on their team and partners is misinformation. Okay, absolutely not. Okay, so let's move on. I don't want to spend too much time here. Let's take a look at their socials real quick. Again, we have the logo changing. Now we have the panther. I believe this is a panther of sorts. And we have this. So I don't know where to go from going forward, from what to expect. from socials anymore, or from their branding, that is, because their branding is all over the place. They have a link tree. Go check it out. Go follow them. Let's give them a follow. Let's support these guys. They have 88,000 followers, and they have a pinned comment. The new ARTRADE is here, sharp, timeless, strong. So this is the new, right? So they try to rebrand or and to be honest, I prefer their previous. Their previous branding is much better than the one that I'm seeing all over the place. It's much better. This, in my opinion, is not doesn't look the greatest. In fact, the artwork itself is poorly done. Again, guys, I'm not trying to rip it apart, but the resolution is really bad. You can see all the artifacts, and the graphic artist needs to be revisited. Anyway, our user is not a speculator; they are an accumulator. I don't know. I don't know. That's far-fetched in my opinion. Provenance, okay, luxury market. Guys, you can see that they don't have any real thing to talk about. Unfortunately, they're just repurposing AI images, and that for me is an ugly vision. I'm not going to go forward with this. Do yourself a favor, right up here in the top, do yourself a favor and search their X and type in partners, partnerships, partners, partner, whatever you want to do, or anything like that, and you'll see nothing comes up. Okay, and there's nothing really happening. So you got to understand, guys, this thing feels very, very stale. Very stale. Now, speaking of their socials are stale as well. I went on their Telegram, nothing happening there. There's one dude there posting quite a bit, but there's nothing happening. And on their Discord is also dead. Lots of scammers and all of that, unattended, and really poor involvement with the community. So it feels stale. It feels abandoned just a little bit here, guys. What can I say? This is their at least they're doxed here on LinkedIn to a degree. As you can see, they have a very small team, 26 associate members, and I'm gonna guarantee 50% of these are not very active members. They're just there, probably not even part of the team anymore. And this is typical for all LinkedIn's. A lot of the times you even have, people that are promoters. See, they're not really core team members of any sort. They're just through association, part of the team type of thing. So just be aware. Now the heavyweight here, I believe, is this dude right here, Paul W, and we got a few others. So let's jump right into that. We can talk about Paul first. Building ARTRADE, the art of real world assets marketplace. So now they have the Panther logo here, and then we keep on going down. He's the founder. They're from France. It seems like they're French. Okay, I don't know if they're from France, but they're from they're from France. I don't know where in France they're from, but they're French, 100%. I can see the manager, and I'm gonna tell you this, guys. I took a look at what this is like a bakery. Okay, this has nothing to do with Web3, nothing to do with tech, nothing. This is a bakery, guys. So seems like he's a manager and president of some sort of bakery for 7 years. Okay, doing luxury. Let's extend this just a little bit. Luxury foods, bakery goods. Again, so let me just show you. Again, since 1954. So this is where it kind of gets a little bit iffy for me, guys. I've seen projects like this, and they kind of bother me, no doubt. Education, business school, okay, that's great. Of course, business acumen in any industry, in any business, whether it be Web3, non-Web3, whatever it is always healthy to have, and that's it. That's it. I don't know what else to say. Okay, so that's one dude. He seems like a very happy, cool guy. Again, um, it is what it is. That's his background. And then we have this dude. Okay, this is where the talent kind of steps in just a little bit from the tech perspective. Experience, I'm not going to try to read this because it's obviously French, but he's got some experience here. I can just read between the lines. He's a tech individual here. He has an engineer front end and lead product engineer. I'm assuming that he has some back end experience as well, which is important, so he can be a full stack dev, product designer, front engineer. All I see is front. I don't see any. Okay, maybe, but one thing, yeah, I see. So the React, that's all front. Next.js, this is all front. That's fine. But again, it's not hard to deploy a token on Solana. And what's cool about him, and again, I don't see this very very often. Of course, he's a full stack Okay, as you can see, he has some education here, format WordPress. Okay, whatever. But he apparently a school that he's attended got qualified to be a full stack. But what interested me most is what I saw here somewhere. I think I might have education, maybe a little bit more. Saw it somewhere. JavaScript. Okay, yeah, he's full on. He's got a lot of good things under his belt. So yeah, I was quite pleased to see he has some Solana trading training here. Sorry guys, School of Solana season 6. So he has some Solana specific training, which is really good for being part of the Solana ecosystem. So not bad. Honestly, guys, these are the two dudes that are running the show, in my opinion. The rest of them are auxiliary. Of course, they have talent on their own, but your faith right now is in what their decision making and what they are able to produce in the next little while. Okay, guys. So that's that. That's the project. ATR. Go check them out. Go do a bit more research. As I mentioned, guys, I'm going to be putting a lot of the infographics and all the good this whole deep dive in a short and deep dive all over the social. So go check it out. Let's see what they got here as a summary. Okay, so ARTRADE as a summary of what they are. Let me just kind of reposition once again. ARTRADE, what is it? Again, it's a real world asset type of marketplace, hinging upon like rewarding individuals for staking, right? And what kind of rewards? APY, voting on the DAO, and most importantly, these raffles, right? These opportunities to get these discounts in a raffle type of way. Okay, so it's interesting, no doubt. Okay, so let's talk about their economy or their ecosystem. All they have is their marketplace. That's all they have. And to be honest, it's an ecosystem is not even due for them. Like they don't even have anything to have an ecosystem for, per se. Even though ecosystem nowadays is used very lightly, I try to keep it very specific. Ecosystem. What projects do they have? What other implementations of tech do they have to support what they got going on? It lends itself more to an L1, no doubt, but I've seen my fair share of projects, especially innovative ones that have complexity, have more levels of their ecosystem. So what they have is an ecosystem, a very single-dimensional ecosystem that focuses on a marketplace. That's what they got, plain and simple. And you got to appreciate it. Okay, so their utility medium of exchange, staking, governance, and unlocks and discounts and tiers and access different raffles and so on. So their utilities 10 out of 10, no doubt. Very easy, very clean, very understandable. 10 out of 10 right there for what they are trying to use the token for. The roadmap is provided, so checks for that. 2025 milestones not met. We're not going to hold them too far because we just kind of transitioned into 2026 anyway, but it's not the greatest look. But the 2026 roadmap, okay, it is there. Luxury brand partnerships, booster packs, daily quests, and some other little knickknacks. But guys, really, the fact that they have one, the fact that I have some ideas to bring in some hype and some interest is great. But the truth is that yeah, they've done their due diligence. So 8 out of 10 right there. The team is small. It is doxed, no doubt. But they have little Web3 experience. I don't see much happening there. The CTPO is full stack dev with Solana certification. He's the only one that I can really say, okay, we're going to have to kind of put some faith in. Okay. And other than that, I would say the team is it is what it is. Okay. So the socials, very confusing socials. Okay, very confusing because the logos are all over the place. The rebranding is not fully let's say implemented. Some parts of the communications are one way and some parts are the others. That seems disjointed and malkept and abandoned. Okay, and going on forward to that, they have consistent engagement within their X, which is kind of bothersome. Consistency is not what you really want. For example, a post, and then have consistently 20 reactions, interactions with that post consistently for months. 20, 20, 20, 20, 20. That's not what you want, right? You want to have some good posts that reach 500 and then maybe come back to 50 and then reach 200 and then maybe come back to 50, and that shows a more of an organic way of engagement rather than having a very systematic all the time baseline of 20 20 20. So you might consider that very healthy, but I don't look at it as a healthy thing. I look at it as very mechanistic um engagement, which you can take that as you feel. Okay, so mechanistic is not healthy, it's not organic. Okay, so Discord is unattained, so is unattended. Discord is completely unattended, which means that you can say whatever you like in there pretty much. Full of scammers, and Telegram is active, it's there. And there's one dude that is posting there and stuff. I think he's part of the team. I don't know. The blog is abandoned and not kept, unfortunately. So they get a 4 out of 10 because I guess they're still there. They're posting a lot of AI generated content, which is in poor taste in today in 2026. Okay, you shouldn't. AI generated content is getting frowned upon more and more and more and more, and getting less and less engagement. So organic material is the way it is. So unedited, non-scripted, the ums and the and the when you're speaking is all valuable nowadays because it shows that there's an actual human speaking. Okay, good to meet you guys. My name is Mike. Tokenomics, we got pretty decent tokenomics, to be honest, right? Because they're fully diluted, so pretty good. Decentralization to community holders, it's pretty good, right? 39% of it is out there, which is pretty good. 27% to for DAO initiatives, again governed by the DAO. And the only aspect that again we have to allocate to a bit of centralization is the 3.6 that is for the company reserves, that we have to trust those two dudes to make the right decisions. Okay, that's all it is, because they clearly say it belongs to the company. Okay, so that's that. Now, as far as being more transparent with the wallet addresses that I mentioned, yes, that could be done, and that's definitely something of value there for more transparency. But going on, relationships, they don't have anything, guys. They don't have anything yet. Nothing that is strategic, nothing that is of major value just yet, nothing that interests me. Again, if there's something that interests you, feel free to let me know. But really, they have a lot of work to do. Now, don't think of all these negative things, especially with the exchange listings, as negative completely. Okay, so think about it as there's opportunity for growth here. Okay, if you're bullish, this is not just bad, right? This is also opportunity to see a relationship happen. Imagine if they actually can, solidify a relationship with a major luxury brand. That means that this is going to go up, and it's likely the price is going to go up. So you have to decide whether this is undervalued or overvalued. Right. And that's very important here, because these numbers don't necessarily say that it's overvalued or undervalued. It just says we're at the current state, they have no relationships. And if they do get one, bang, we're going to start to see this thing fly. Now, exchange is the same thing, guys. If we get listed on Coinbase, this thing's going to fly. You get listed on Binance, it's going to fly. You get more listing on Bybit and KuCoin. And is KuCoin? No. You get what I mean? So we start to see major exchanges listing, and liquidity improves, and so on and so forth. And, guys, it is what it is. It's a $1.5 million market cap. It's a baby cap. You have to expect this. Lots of room for growth, or maybe not. Okay, so these are decisions that you got to make, right, with these very speculative, projects. So, guys, look, these are the exchanges. If you're interested, go check them out. They're on AscendEX, guys. I have links to the AscendEX platform below. Go check them out. They're a new exchange. They're trying to offer some great bonuses, trading bonuses and such. So go check them out. Now, again, tokenomics wise, their supply is 100% out there, given that they did burn a significant amount, as I mentioned. Their token is, retail is going to love the fact that it's a fraction of a cent. And as of doing the deep dive, we were around 2 million, but we've dropped since. As you guys know, this weekend has been rough here in the crypto space, and volatile projects such as small market caps get the short end of the stick. Okay, so don't hold me to too accountable with these numbers, because this space, guys. You blink and all of a sudden you lost 10%, 20% in value overall. Okay, so let's talk about the verdict overall. What I have for you guys here, just a quick summary again, not to repeat too much here, but it's a real world asset narrative, NFTs, Solana. This is where we're at with things. Okay, wallet distribution healthy, a little bit more transparency can be achieved, as I mentioned. Raffle revenue burn, this is the way they burn. From every winning raffle, transaction is automatically and permanently burned. DAO voted burns, that's another way that they can get burned, get more tokens burned to decrease supply. Remember, there's 1.2 something billion still, so there's still some more room. The initial supply was 1.8, but after the burning of 539 million, it reduced to the current total, right, to turn in current max. There's no more minting, so it's not like they can mint more or choose to do that. Now, we know that they can fork off to another chain and eventually reset that based on a DAO a vote. Okay, so just keep that in mind. APY rewards are funded and by a dedicated staking reward reserve, which is allocated about 66.5%. Again, that needs to be replenished as the project earns and earns and earns. Traded reserve, 13 0.6 tokens owned by the ARTRADE company, strategic purpose. Ultimately, this is a bit of tokens that can be used to keep ARTRADE going. But this is completely in control and owned by the company, which is not a good thing. Okay, 27% DAO supply for revenue sharing initiative and voted by the DAO. So there's a difference here. The reason why I said it's not a good thing necessarily is because it's centralized, and we have to have a faith-based system that the team is going to do the right thing with these tokens. Whereas the 27% here is through governance in the DAO, which means that ultimately the DAO means that the people have a voice in how these tokens are going to be utilized, right? So Realms DAO platform, 115 members, 31 proposals, very, very small DAO participation. Gitbook is well organized and very clear, of course. There's a couple of things that could be shifted around, but generally speaking, it's okay. Guys, I just want to sum it up by saying one thing, because I didn't really emphasize it too much here in the summary. Their marketing, their communication needs to improve because it's very confusing. I don't know at any given point if I'm speaking about the same project. They need to get their acting gear, and it seems completely abandoned because of that. Socials are abandoned, communities are abandoned, and their marketing communication is abandoned. And I can tell by the implementations of their new marketing that the graphics, because they're so poor quality, that something was made very quick and makeshift. Okay, guys, I need to get some upgrades happening there. It doesn't look very luxury with blurry logos and such. Okay, so ATR with the market cap of 50 million. Again, guys, $50 million market cap is still very, very small. 25x if we can get there. Okay, I'm just saying if we can get to about 0.039, you've done very well, guys. Again, the rating is not high. I'm hoping for the best. I'm hoping that these projects that come up with these different ideas get their advantage, their first mover advantage. But this is on the spectrum. This is very, very risky. Okay, guys, so it is what it is. As you guys know, I release all of these on the social so that you can use them as just quick summaries for future and to get your, quick updates or just reminders on what the projects are all about. But in addition, guys, I am going to be talking about some price action, guys. I know you want to talk about price action as well, so let's get right into it. What is going on with the ATR price? Guys, we can't hold it accountable completely because the market in general is looking a little bit sloppy. As you can see, ATR right now looks pretty bad from a chart perspective. Guys, let's take a look at this in a little bit more detail. Now, there's no way that I would be buying this in this current state. Absolutely not. I wouldn't touch it. I wouldn't even be looking at it. Not because it can't reverse and can't reclaim. It's just because we don't have no evidence of that at the current moment. It's still in a very high sell-off moment with volume making lower lows and lower highs on a downtrend. If you are buying right now, you're trying to be a hero. This is the problem. You're trying to time a bottom, and you might fluke it. You might catch it. And if you do, congratulations. You won the lottery. But the reality is, guys, there's nothing here that interests me from a chart perspective. It is being sold off systematically since July of the summer, as you can see, all the way till now, until February, and we are selling off completely, and rightfully so. The rest of the market is not in a good state either. Okay, so I'm just gonna, again, it's not exclusive to ATR. The problem is ATR is $1.5 billion market cap, doesn't help, right? Because we're talking about a very, very speculative state. Now, if you start looking at areas of interest, okay, these were areas of interest, broke below, no market structure, none whatsoever, no change of character, lower lows and lower highs, dead cat bounce, break below. Next point of interest, previous bottoms, consolidation levels since 2024, bang, went right through it, fell right through its bottom, guys, and keeps on selling off. What are we supposed to do here? right? Assume that it's going to get a reversal until we do, right? We have to understand. We have to wait patiently for those reversals. So what we're going to have to look for is a market structure shift or a change of character here. There's no way I would be buying this unless we get back above here. There's no way. We got to close the daily candle. We got to back test, and we got to, and ideally, wait for all the confirmations and produce a higher high. If not, at least get in when we get above and close the daily candle. Buy a little bit. We go up, we back this, confirm it as support, buy a little bit more. We move up and confirm a higher high, buy a little bit more. You're buying all in this general area. And you're probably saying, but Mike, look, you're buying a higher level. You should have bought down here. No, I'm not here to take risk. I'm not a gambler. I don't gamble with my money. You shouldn't either, right? We don't know how long this is going to take to fall to zero, if it does. Okay, so this is what we have to understand. I'd rather buy a higher price. I'd rather pay for a premium and understand that we are starting a new uptrend and reclaiming previous price action, which at best case scenario, we get back to about 0.025. Okay, that's all I'm looking for a project like this. Why? Because from a gains perspective, average right into here to right around here, which is the next previous level, that's 300%. I'll take that all day long, and I'll take my initial investment off the table and let the rest run. That's the easiest way to do it with a small market cap project like this. And that's all I got for you guys with regards to price action, because there's nothing to say. This is a very risk-on asset. Even from a fundamentals perspective, you can tell this is just a startup that is, it doesn't have much roots, and you're taking a lot of risk. All right, guys? So if I've offered you any value in this video, in this deep dive, do the channel a massive favor. Slap the like button. It does really help out with the algorithm if you want to.